This is Eric Muathe with Muathe.com for January 21st, 2021. And this is going to be part 3 of what has been a quick study on how to time intraday moves, potentially taking advantage of some directional bias in the market based on the charts only. So we can see the market essentially trading at all-time highs again today. As you can see there, NASDAQ, S&P 500 and the Dow. And as a follow-up, this is going to be part 3. So you've seen part 1 and part 2. If you haven't seen part 1 and part 2, I would suggest you watch those first before you come to this video so it can make sense. Now you can see here the cryptos are now showing a move for today alone down about 10%. There's Litecoin down 10. Bitcoin is down about 10. Ethereum, if I can find it, is down about 12%. Now, if you remember part 1 and part 2, the charts were suggesting that there was a move imminent to the downside. And so that quick educational video has some bias and some legitimacy in the fact that it predicted this move. So anyway, let's go to the S&P 500. As of today, we've seen the market yet again stage a fresh all-time intraday high today, with the S&P 500 touching fresh all-time intraday highs. But there is an issue with this. In my opinion, take a look at your RSI. By the way, I've really gone to the small time frame. This is 5 minute. And your RSI setting is at 26. The reason why I use 26 is because I'd like to remove as much noise as possible. 26 is, of course, 13 times 2. This is the number we are taking advantage in this setting right here. At any rate, I believe this negative divergence is a big deal because the market made a fresh all-time intraday high today. And you can see the RSI did not move above 61.8. I think this is a big tell that your markets are running out of juice in the short term, maybe eventually lead to a substantial breakdown in the markets. In fact, as I mentioned in part 1 or part 2, I believe the cryptos and the general market are going to be following each other. So if Bitcoin has already dropped 10% over the last 24 hours or so, I believe the US markets are going to start responding likewise. Not down 10%, but they're going to start responding by pulling back initially. And then we'll see whether this is going to be a normal pullback or the beginning of a substantial bear market. Now, if you take a look at the 4-hourly, which was the main basis for part 1 and part 2, we can see that the Dow here is pushing to fresh all-time intraday highs today. And we are still contending with the line that I had drawn, which is the formation of this long divergence here. So the more this divergence continues to hold, the more this is telling me that one can prepare for a swing trade pullback to the downside. And it also means that should the market clear this resistance line in a sense, then expect a continued sharp advance in the markets. So right now we are on the watch out, or I'm on the watch out for divergence confirmation. This is now the NASDAQ. And again, the NASDAQ, yes, pushing to fresh all-time intraday highs. But there is what could end up being divergence, Otherwise, the market has an opportunity also to clear this line and really push the market to improved all-time highs. I'm leaning towards resistance just based on what the cryptos have done. S&P 500 also, we can see today alone has moved to a fresh all-time intraday high setting. In fact, we can say it is net at the moment at all-time highs. But we can also see that here there is confirmation of topside resistance that continues to play out. We can even draw it this way. So if we end up seeing that the market stalls around here, this is suggestive to me that we are going to be following the way of the cryptos, which is a strong pullback to begin with. And then in time, we'll see whether this is going to develop into a substantial, aggressive bear market. But for now, for me, from an educational standpoint, based on what we've seen, this being part 3, I would lean down for a swing trade lower. Now remember, we discussed this in a previous video where I was talking about rejection at the 69.1 threshold. And this has led to this pullback we are seeing here. Remember, this is Bitcoin. And I also talked about understanding that the big picture sell-off confirmation, like really aggressive downside reaction, is gonna come if and when this can be broken. The RSI lows line needs to break, and if it breaks, we can anticipate a continued more aggressive sharp move to the downside. This line also offers the cryptos an opportunity to actually stabilize. By holding around here, they can stabilize and start building for a potential future weekly breakout. It's another way of saying that the S&P 500, and this is the daily, would also need to break below this line here, the RSI lows line. A break of this line down the road would be the initial major sell signal for 2021. And as the S&P 500 approaches 69.1, success above 69.1 would be bullish and give short-term momentum to the upside. And at the same time, failure to hold and move above the 69.1 threshold would be suggestive of a market well in due of an initial pullback. And then we'll see what happens when it comes to the 50. It can bounce or break. We'll see what happens when it comes to the 200-day moving average. It can bounce up around here or break. And again, we don't know this until those situations are presented to us later on down the road. For now, based on what we've seen, and also based on the fact that, in my opinion, the cryptos are leading here in the short term, and they're indicating there's a pullback in store for the general market, I would say the general market also is due for a reactionary move to the downside. Purely educational, short-term trading, swing trading, intraday trading. And so it is. Eric Muathe with Muathe.com. Love light, light love. Namaste.